I'll let Cal start it off, but basically, we'll go through a little bit of market recap, but probably the summary is it's felt a lot like a nice average temperature with one hand in boiling water and one hand freezing water, and you say the average temperature is really nice, but I think most people would say that it's been a little bit of a bumpy ride, but maybe back to about even.
Yeah, thanks, Adam. I was joking. I had a couple client meetings over the last few months, obviously, and it was one of the things where it's like it's been a pretty quiet year so far. And most people react with a little shrug and a laugh, and that's the case. I mean, depending on when you're meeting and when you're talking with clients, it's always kind of the thing we talk about is timing is relevant. But it's, if you're meeting in the middle of April, the downtime, the world's coming to end, the tariffs have been implemented and implemented, but talked about. And, markets were down. If you look at kind of the S&P and the Dow, they were down anywhere from 14 to 18% for the year. From the highs, and then the NASDAQ was down about 25%. And it was, okay, well, is the world coming to end conversations again? Fast forward, we put some pause on some of the tariffs and some negotiations come in, and all these indexes essentially recovered those losses that we saw in that couple-week period there. So Dow, S&P have recovered almost fully, and then the NASDAQ was down about 24.5%, and it's back up 24.5% from the lows. So year to date, it's kind of flat. So like you said, it's been kind of a wild ride to get back to even. And so Dow's up, or down just slightly for the year, about a quarter point. The S&P's, up about a half a point. NASDAQ's down a point. And we've seen some positive returns for the bonds so far for the first half of the year here, roughly about up almost 2% for the year. And commodities are down about 1%, a little more than 1%. So I know one of the things we've talked about too is kind of that volatility metric. And so from the high when things were looking really kind of questionable in April, I think the VIX hit up around 82 in April. And it was 82 or 52.
Yeah, but if you don't understand 52. The VIX, I mean, for most people, it's like, it's around 20, 25, 30 is considered, starting to consider getting volatile. So yeah, it was wild for a little bit.
It's just our volatility measure, right? Yeah. So it's the fear, the panic in the market, if you will. And so it's back down to around normal levels of that, 18, 19 right now. So it just kind of seems to be kind of stabilized a little bit here and pretty resilient.
Do you have the international number?
I don't have the international.
Plus 14 right now for the year.
I'll show you here.
We're flat in the U.S.
I'll give everyone a visual. So I've got a chart here called Markets Year to Date. And this is kind of a visual summary of what Kyle was just explaining. And so, if you went to bed on January 1st and woke up today, things look okay. But, we've fielded the phone calls, talked to clients, and everyone's been watching the news, and it's been anything but calm. And so my point of this visual, though, is, when we work as your financial advisor, I mean, really what we're honing in on is balance and diversification. And so as hard as we were blue in the face last year defending a balanced portfolio because everybody just wanted tech stocks. Yep. And the one thing that does well, usually everyone wants to chase. I mean, my eyes opened, I think it was like November, December, when I had a client for the last 20 years has only been in government bonds. And she's 81 years old, and she wanted me to explain to her what NVIDIA was and what these tech stocks were and what these companies were and things like that. And so you can see when things get hysteric. And so when we preached diversification, you're going to see the example here. And so, if you just watch the news and you see the red and the green and the red and the green and the big numbers and the headlines and headlines and headlines, and as we all understand, the media is there to drive fear, and they do a very good job with it. If you have a balanced portfolio, like many of our clients do, it was the U.S. stocks that were impacted, but everything else kind of hung its ground. International stocks were up better. Bonds were up. Some of the commodities like gold did well. And so if you've got a balanced portfolio, you might have seen on the news that the stock market was down 10 to 15%, but a balanced account was maybe down mid-single digits.
If that. Yeah.
If that.
And it's a lesson again of what role we're supposed to play. Are we supposed to, for most of our clients, the idea is to stay wealthy, right? Not get wealthy. We don't have a lot of people that come to us to figure out how to get rich. Yeah, it's hey, I want to hang on to what I've worked really hard for this. I want to hang on to it, and that's what diversification is all about, anyway.
Yeah.
International's lagged for 15 years. Yeah, 15 years. Mm-hmm. And then the gold. I mean, I see that gold chart up there, and it just makes me think that people are going to start calling soon. And should I be buying gold? It reminds me of back in 2011 when everybody was, hot on gold, and then it drops off the face of the earth for, 6, 8, 10 years. And now it's back. But if you look at gold, I mean, before anybody asks about gold, because I know it's coming, basket of stocks, gold over the last 50 years, just look it up. I mean, it's not even comparable. Gold's a great, it's a great store of value. It's a great diversification piece, but you don't want to trade in all of your equities for gold for sure.
Yeah.
Doesn't create much cash flow.
It does not.
It doesn't create a dividend. I think the reason why it's done so well recently is just because of the fear of the printing, more money printing, more money printing, the dissolving of the dollar, et cetera. And so, but it's a diversified asset, right? And I think that's kind of the moral of the story is that you don't want all your eggs in one basket. That the first thing we ever learned about investing, it still holds true. Everything has its day in the sun, and we don't know whose day is next. It could be international, it could be emerging markets, it could be small cap, it could be mid cap. Who knows? And so by having a balanced portfolio, you're always going to have something that's doing okay.
No question.
Yeah. For the record, I think for about a year, I said value is going to outperform growth. I think if I
You've done it.
I was with you.
Not wrong, just early.
Broken clocks right twice a day. I love it. Oh man. Well, and on that note too, that just with fear and the volatility in the markets. I mean, again, not a political thing. I think everyone can agree. Trump is not afraid to move in whatever direction he feels that he wants to move, and so the markets do like stability. And they like certainty that, hey, things are going to continue the way, or at least predictable. And, just the tariff thing has just been, wildly unpredictable. And maybe it's a negotiation tactic for him. Who knows? But you can see how much the markets enjoy it when, it's, wait a second, we're adding 50% tariffs. Oh, no, wait, we're taking them off. And that's part of the jumping around.